Hello everyone, this is Trade 8, one of the best YouTube channel if you want to be profitable on your trading career. Today I'll be talking about the three confluences that I use in my trading that have made me a lot of money trading the forex market. So today I'll be giving out the strategies for you, and I'll be using this opportunity to let you know about my Telegram channel where I drop free signals for those that want to learn trading. You know, a lot of persons spend money trying to learn trading, buying courses, paying for mentorship, and they are left with nothing to fund the account. So I've created it in a way that you use your money to fund the account and trade with me while I guide you. So you're not paying for anything, you're not paying for any course, any mentorship. I don't even have a VIP. All these persons you're seeing here are just free signals I'm giving to them. I don't charge you for a dime. You can go in there and chat with any of them and ask if I have charged for anything. So last month I'll be hitting it back to back, back to back. You can scroll, you can just go on there, use my invitation link and go back and see the trading I've been trading for the past month. Yeah, so you see what is happening. So we are not faking anything, we are not scamming anybody. This is just pure and help. I'm helping you for you to stay away from those scammers out there, fake gurus that have been eating your money. So instead of you paying for their courses, paying for their mentorship, use the money and fund your account and learn from me while I direct you. So today I'll be talking about the three confluences for you that want to be an expert or a professional in trading. You know, for you to be an expert, you have to work more on your emotions and your risk management for you to be an expert. Forget about the strategy aspect, but strategy as well helps you. So these are some stuff I use. I've been talking about the stochastic, the EMA, and today I'll be talking about the price action, things you should see. So for you to combine this EMA and stochastic to get a good and a profitable result. I've been using it. It has been working for me. It has been working for me a lot. It's working for me a lot. So you can't see a negative, positive throughout. You have to see negative, but stay on profitability. Stay on profitability. Even if you go to the Telegram channel, you will see that we have been hitting it also throughout, no losing streak. So I have to know that. So just stay on profitability. That is it. You won't have 100% strategy. There is no holy grail. Just have to control your losses and you stay profitable on the end of at the end of the month. You stay profitable, or at the end of the year you stay profitable. So these are the things you have to work on. So using the stochastic, the EMA, and how the market moves. Before I go on full details, there are some things you need to know on this strategy. These things has to do with the kind of patterns you have to see before you make use of the stochastic, or you make use of the EMA. Now, the pattern you have to see is one, the head and the shoulder. For you to make use of the EMA correctly, you have to know the head and the shoulder formation. Now, before you check on to the head and shoulder formation, you have to know if the market is on a moving trend on a higher time frame. Now, I want to say this for you. If you want to trade the market or to be profitable in the forex industry, if you want to make an analysis, analyze the market from the monthly, the highest time frame, to the time frame you're trading on. Let's say you're trading on the 5 minutes, analyze the market from the monthly time frame to the 5 minutes. If you're trading on 1 hour, analyze the market from the monthly to the 1 hour. That is how I trade to stay on profit most of the times. So it works. Now, for you to know if the market is on a moving trend, you have to go up to the higher time frame to see. Now, if I go to the monthly time frame here, you will see the market is on a ranging formation. But this ranging formation doesn't actually mean the market is not moving on the lower time. Now, if you look down here, you could see this market has this kind of formation right there, head and shoulder formation. Let me use my pen tools to now see. This is like a head and shoulder formation. Now, can you see? So the market is actually heading to this, either to form this the right shoulder before falling. Now you have seen that the market has a motive, is in the motion, is it has a target. The target is to form the right shoulder. Now since market has the target, if you go down to the weekly time frame, look at it as well, you will see the market is on the kind of motion to the particular point, is heading to a particular zone. Now you have seen that, and what did I tell you? If the market is above the EMA 10 on the higher time frame, that means the market is on an uptrend. I have said that countless times on my last videos, so you can go out and check it. So when market is above the EMA 10, you know the market is on an uptrend. Now if you go down to the daily time frame, for you to know if this market is actually moving in a good direction, what did I say? You have to know some certain patterns: the head and the shoulder, the double bottom and triple bottom, all of that. Just take note. Either you use three of them: the head and the shoulder formation, the double bottom, or the triple bottom. So right here, what I could see with my own eyes, I don't know what you're seeing, right at this zone here, you could see there's a kind of formation, can look like a head and shoulder right there before the breakout. Could you see that? Now that is it. Some person will say it's formed kind of bottom, triple bottom, double bottom before the breakout. Now that is what I could see. I don't know if what you're seeing. Now look at it very well. This is on the daily time frame. Now after the breakout, you will see that there was a kind of market crossing over at the 20 level right there. Now what did I say last time on my video? You have to wait for the first formation. I usually say this. Now the second formation is where I actually go in. Now I've seen that the market is actually moving with the EMA 10 and the stochastic, sorry. The market is moving with the stochastic at the higher time frame with the first movement after forming the head and shoulder formation right there. It could be double bottom, it could be triple bottom. After that, there was kind of movement that the market used the formation, the crossover at the 20 level to move. So I'll wait for the second time the market is come back to the 20 level, which was this one right here, close there. Now let me use my pen to so go down to the lower time frame right there. That was where the crossover happened, and we have this right there. So on that, I have to go down to the 1 hour time frame to see what is happening. Could you see there was a kind of head and shoulder formation? You can even capitalize on this head and shoulder formation to trade. But what I do as an indicator trader, now I want to see a crossover of the EMA. What do you want to see? A crossover of the EMA right there. Here we have a crossover. Could you see that? Now this will either be my entry right there. That could be my entry to the buy side. That could be my entry to the buy side. Then, or I wait for a kind of, I want to see a pattern. Now, if you want to wait for a pattern, this is a head and shoulder formation right there. Right, this is the head. Then the right shoulder is where you should wait. Could you see that? That is how you analyze the market using the stochastic and price action of what the market is showing you. You could use that to enter. Now, for those trading with the stochastic, could wait for the first move out of this zone right there. The first move, the market moved with the stochastic, right? This is what I do after breaking down from this zone. Market moved. I looked at what market moved with. Then I'll wait for it to return back to this zone. This is actually, but it didn't actually tap into the zone. In some trades, you see it fall into the zone. Then I wait for the crossover at the 20 level. Then with the candlestick formation, then I buy, hold to the upper side. So the strategy is very simple. You can check other market as well, other pairs as well. This is what I do. This is what I do. So right there, let's go to the higher time frame or the monthly. Let's go to the monthly. Analyze the same thing. Now, if you look at this, you know the market is in a ranging form. There is no much movement here. Now, if you go to the weekly, what could you see right there? You're seeing something, a head and shoulder. I actually took this trade on my Telegram channel. I didn't hold for long based on timing, so that was my pain. I also took a buy on this as well. Now look right here. This was where I made some profit here. I took that trade from here. Now look, what do you see? You see the head and shoulder formation right there. Now, so many of us trade with other block. The market returned back to this zone right there, the demand zone right there, after the head and shoulder formation. If I want to trade it, I'll allow the market to tap into this zone right there. That is where the market will tap in. Now, I know if the market tapped in here, it's going down to here, right? Now, let me use my 2 right there. Let's see when the market tapped into the other right shoulder. Now, if the market tapped in there, I already know the market will be heading down. There will be a down push. Now, let me use the 2 so you understand, see clearly. Could see right there. Now, that's what I could see. If I head down to the daily time frame, down there, right? What could you see? A head and shoulder formation, right? That is it. That is it. If you have seen this, let's say this haven't been formed, this other shoulder haven't been formed, that is what you're waiting. That is the actual place you're waiting for. Now, wait for this market to go in here, form the head, return back, go in. This is actually where you start taking entries. Now, you don't take entry on your daily time frame because of how the stop loss, the size of the stop loss. So your stop loss will be much bigger. So you go down to the lower time frame of the 1 hour right there. So you're waiting for the demand zone to activate. Go down to the 1 hour right there. What could you see on there? You wait for market to form a kind of double top, right? You could see the double top right there, then a break out of this zone. Now, if you want to use the stochastic, you have to wait for the first one. You shouldn't sell on the first one. Wait for the second touch. This was the first touch. This was the first touch. I remember now. This was the first touch. Wait for the first touch, which was this. Then the second time the market is going in there with the candlestick formation, you sell down. So you could see market have been selling ever since then. The breakout, then the first move and the second move. Let's look at other trades. Now, this is the double bottom formation right there. Double bottom formation right there. Buy. Then you wait for first touch on the stochastic, which is this. Then just wait for a second time. The market will tap in again. This is the second tap with bullish move. You hold for a longer time. So that is how I trade the market a lot of time. That is how I trade the market. I have to see the double bottom, double top. Let's check other pairs. Double top or double bottom after the first formation using the stochastic entry. If the market uses the stochastic entry, I know my second touch. My second touch will be also based on the stochastic.